In today's video, we're going to be looking at the Mobile CBSA, not just the MSA. And the reason we're doing that is because Mobile County is the MSA and Baldwin County has its own MSA, yet Baldwin County and Mobile County share the employment center, which is in, around, and near downtown Mobile. So people from Baldwin County travel across the bay to work in Mobile County. So I am going to do these combined in a CBSA, which is a combined based statistical area. All right, and it's because they share an employment center. Now, it just so happens that I live in this market, specifically I live basically right about here, okay? So that's about where I live. And if we look at this, the majority of the Class B properties in our market are right around this little area right here. And if you've seen any videos that I've done about creating trade areas, you'll know I use the trade area around my house because I'm dead center in the middle of it as a good case study. So let's scroll back out and see where we are. So we'll scroll a little further because maybe some people aren't familiar with the Mobile, Alabama market. So you can see here is Alabama, Mississippi, and Georgia. Here is the Florida Panhandle. Baldwin County is on the state line. Here is Pensacola, Tallahassee, and if we go the other way, Mobile County is on the Mississippi state line. It's only 67 miles across I-10 from state line to state line, and here we have Biloxi, Gulfport, and then the Louisiana state line to New Orleans. So this gives you an idea of where we are. The Mobile MSA has the closest deepwater port. Our port is located right here to the new Panama Canal, and it is 50 feet deep and has been widened so the new Panamax ships can turn around for economic reasons. Okay, so all that being said, let's take a look at our filters. As usual, we have the same filters. So we are excluding corporate, military, senior, and vacation, and we are only looking at market and market affordable. There happens to be a lot of affordable apartments in this area. If I click affordable, you'll see it change from 354 to 450. So almost 100 properties in the area are considered affordable or tax credit properties. This is not a very high income area, okay? So knowing that, let's go look at the data. All right, so as we can see our supply snapshot, we have 354 properties and 31,661 units. There are still 280 units under construction, and we have negative absorption over the last 12 months, which means 406 more people have left the rental market in these two combined areas than have entered the market. The vacancy has gone from 5.3 to 8.1, so closer to that long-term occupancy average. And rents have gone from 1062 to 1110. Year over year, we'll see what they look like quarter over quarter, with price per unit increasing from 113 to 118. So our capital markets show it's still strong. Our supply market or space market shows that it is getting weak and has cracks. Let's come down and look at our vacancy in the bottom. So we can see that the long-term occupancy average is about 90.81 or 9.2%. And we're currently sitting at about 91.89. So we're still above the long-term occupancy average. We haven't dipped into recession yet, but it's getting very close to getting to that point. All right, so this is for A, B, and C combined. So first, let's look at the data for A, B, and C, and then we'll do each one individually. All right, so here is the data. Again, we are looking at effective rent. We don't care what the property management company or owner is asking. We want to know what they are receiving. And effective rent is rent collected. Asking rent is what they are asking. So in the first quarter, rents were $1,071, went up to $1,100, went up to $1,104, and are now starting to trend down to $1,092. All right, so We've got 3/4 of growth, albeit very slow growth between second quarter and third quarter, and now we're starting to see a decline. So let's head over to our deliveries under construction and absorption data. We could see we delivered 316 units in the first quarter, and we did not absorb them. As a matter of fact, five more people left than entered the rental market at that time. It did manage to absorb 97 of those 316 in the second quarter with no deliveries. So then we added another 270 units, and then absorption started going backwards. So what I know about this, because I live here, is these rents are way over what the market can handle. We do not have a very high median household income here, and these rents are well above that median household income. So an affordability issue is definitely taking effect here, as we can see in the third and fourth quarter, where people are leaving the rental market, which means they're not leaving the area because they have to work here. They are doubling and tripling up and moving in together. And I happen to know some people that have done that, and that's what's occurring here. All right. Just because I know this market, I live here. All right. So this is all A, B, and C. Let's go look at the A's and see how they're performing. Okay. So here's our Class A data. Again, we're looking at effective rent. You can see that we only have 25 Class A properties in this market. So not a whole lot of new construction, but there has been some. It started at 1463 at the beginning of the year, went to 1522, then to 1540, and we hit the affordability apex at that point, and now it's starting to trend down. So let's see if construction, deliveries, and absorption shows us why that is. So we only had 270 units that delivered during this time frame, and if we look, we pretty much are leaving the market in the A's. So we delivered 270, and in this same annual period, you ended up with what? That is 48, 79 negative, 84 positive. So you ended up with 5 total people absorbing 270 units. That's not going to work. So we're going to continue to see the A's trending downward. So Mobile, CBSA, Mobile and Baldwin County are on that trending downward phase and are sliding down in rents. And I think that trend will continue. So let's go take a look at the B's. Okay, so here is our Class B data. You can see we have 112 Class B properties. For effective rent, at the beginning of the year, we started at 1126, went up to 1150, stayed at 1150, so no growth between second quarter and third quarter, and then decline in fourth quarter. All right, so let's see if we can see why. We delivered 316 Class B units in the first quarter, only absorbed 69. Did continue to absorb in the second quarter, so we absorbed 243 total of the 316, but then had a major exodus. All right, so at this point, the residents for Class B properties in Mobile, Alabama and Baldwin County have said, we can no longer afford this. We're either leaving, we're buying homes, or we are doubling and tripling up. Okay, those are the 3 scenarios that could happen. I think we all know what the most likely scenario is. So Class Bs are definitely fractured, and I think we're just going to continue to see this trend move downward. You can see they started at 95.7% occupancy and have gone all the way down to 92.5%. All right, so let's go look at the Class C market. So here are our Class C properties. Again, effective rent. We have 207 total properties in the marketplace. We started the year at 814, went to 836, went to 839, and then to 844. Okay, so we have continually gone on an upward trend, but let's see what supply tells us and see what absorption's doing, because you're not going to have any deliveries or under construction. And this is interesting. So another market where the owners are taking advantage of the situation. In no circumstance, when you have declining occupancy and people leaving the market, is this showing you that there is more demand to increase your rents. So these owners and these property managers are increasing their rents arbitrarily just because they think they can. And the more they do that, the more the people are going to leave this market. So we know they're not going to the Bs because the Bs are also negative absorption. We know they're not going to the As because the As are also negative absorption. So that means these people are doubling and tripling up, or they are leaving the rental market completely. The likely scenario is they are doubling and tripling up. So this is another ethical travesty that we're seeing, that these apartment owners are taking advantage of the residents and just increasing rents because they think they can, even though there's not demand for it. I got to tell you guys, this does not make me happy. I'm seeing this over and over and over. But you know what? It's all coming to a head because these owners that are doing this, they're going to get theirs. All right. So that is the Mobile and Baldwin County combined based statistical area. Tomorrow, we'll be looking at Gary, Indiana, which is kind of an extension of Southside Chicago, if you happen to know where Gary is, in that northwestern corner of Indiana, just below Chicago. So we'll see how that looks, and I will see you tomorrow.